In this video, I want to replay an old lesson based on 3 psychology tips that are very important for you to understand. I want to replay it and I want to go and add new information based off of the charts so you could see the points a little bit better. 3 important psychology tips that equate to having a good day trading, winning trades, and trading less to make more, focusing on quality setups, and getting rid of the money-making mindset that is going to prevent us from actually making money. Before we get into this replay, I do recommend everyone to follow me on Instagram at Entrepreneurship. I'll post a link in the description below if you want to follow it. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you're not going to find anywhere else. The link will be in the description below. You're seriously missing out if you're not following it. But now let's get right into this video. So we're going to have some real life examples in this, and we're going to relate it to trading and basically how life and trading shapes our emotional experiences. If we expect good things to occur, then we're going to be optimistic and, happy about it. If we expect negative outcomes to occur, then more than likely we're going to feel anxious, we're going to feel nervous, and we really don't want to know what the outcome is going to be. So that brings me into the first point here, which a good day doesn't always mean a winning day. What I mean by this is that a good day trading in the market doesn't always equate to our emotional experiences with our profit and loss. I know a lot of traders look at your profit and loss, and whatever the outcome with that is, that's going to shape your emotional experience and how you feel that day. You lose, you're going to be anxious, you're going to be nervous, you're not going to be feeling good. You win, you're going to feel euphoric, you're going to feel optimistic about your trading. And that's not bad, but I'm just saying it doesn't always equate to our profit and loss. You have to look at the market differently. You have to have zero expectations every day. I go into the market and have zero. When you have zero expectations like this, you are ready and you automatically accept the unknown. Good or bad, it's accepted before the fact of the trade that goes on, and you have zero expectations. If you go into the market and you expect to have a good day, in the back of your mind, you're going to equate a good day with basically being a winning day and you making profit. And then if you don't end the market, you don't end that day with a profit, you're going to feel disappointed and it's going to mess with your emotional experience. And that's basically going to mess with further trades down the road. So what I define as a good day is I look at if I follow my rules, I stick to my trading plan, and I don't deviate away from my strategy, which is supply and demand. It's also a day where I trade with proper execution and I practice good risk management. Those are all important things. And risk management, in my opinion, is the number one most important principle. And you have to get in the habit of only trading based on setups where the risk reward is in your favor. If you're deviating away from that and the risk reward is not in your favor, then you're just setting yourself up for failure. Now, what I mean by this was a trade that I took today on July 21st on Tesla. From the pre-market plan, I post these every single day on my Discord, setups I'm watching, levels I'm looking out for, and potential trading scenarios based off of my own plans. Tesla was on the watch list today, and what we were watching for was price to get above the 765 to 771 area to play long. Once above with interest in the market, I will target the 797.41 supply. This will also help with a ES and NQ bullish thesis. So now we have a major market leading equity like Tesla who just reported earnings this week, and we had a bullish scenario if we could get above 771 and 765 to target that. Once we could get above this green box, which is different from a demand zone, we did not have anything stopping us from rallying into the 797 supply. So what I really liked here was you could get long as soon as we break the level. Buying volume was very strong. We had 47 million shares traded today compared to a daily average of 30 million. So definitely way above the average, 1.5%, 1.5 times the average. We broke above the level, but what I really, really liked here was how the market pulled back into this 771, 775 area here and held. Now, also as this held, we had major market leading equities such as the S&P 500, such as, pull this up here, the NASDAQ, which also at the same exact time that Tesla was bouncing off of this level and breaking above it with strong volume, we had the NASDAQ bouncing off demand right here with it. So market was at demand, Tesla was at demand. You see how I have a plan, and now I execute the plan as long as the risk is in my favor and I leave my emotions out of it. So now I'm in this trade at 9:37 when the market looked like this, 9:38. My stop loss is below the 769 area. So now I'm in around 777. I'm risking about 769. That's an 8.7 point risk. If I'm long at 777, my target is the 797 supply zone. So I'm risking about 7 or 8 points to make 20 points. It's close to a 3-to-1 risk to reward. I only take setups if the risk to reward is in my favor, and I adjust my size accordingly. The market came up, and really what I liked with this setup, this is what I mean about taking one quality trade over 10 low quality setups, because everything aligned with this setup. If you see in my last video, I went over trading and finding high quality setups, and I talk about when everything aligns. In this example, everything aligned, and it was one high quality setup that we pulled back into the level. We retested it. We had the market confirming this setup. I implemented proper risk management, and then the market just continued to rally, and it exhibited relative strength compared to the market, where the market would dip down. Pull this up here. The market would dip down, and Tesla would not get affected by the dips, meaning relative strength. And then right around 11:30, we hit target. I got out full position. It was a very simple trade. I maintained my risk. I only sell when my target or my stop loss triggers, and the rest is noise. Another setup, following my rules, sticking to my plan, executing perfectly, and practicing proper risk management. The S&P 500, again, we had demand at 39.38, where I'm hovering my cursor over right now. And then we also had supply above at 39.72. I said I expected the market to remain in balance between these areas, where I look to sell the highs and buy the lows. That's the balance rule, where I look to sell the highs and buy the lows to the downside. However, if we move out of balance, it's going to bring continuation in either direction. I'm watching if we break above the 3972 supply zone with strong buying. I'm open to playing longs, targeting 4,000, and then the 4010 supply zone. So those are my levels of interest, and I must use price and volume to execute and find an area to define my risk. The market came down into this demand zone. I did not take it long at demand because at this point I was in Tesla. I personally don't like opening up two positions at once. Sometimes I do it, but it's kind of against a rule of mine. And then we rallied inside of supply, and what I liked here was we broke above balance. What I mean by balance is look at this area of consolidation from the past day and a half, where we're just making highs, making lows, and we're in a very tight range. When the market breaks out of balance, this is when we get continuation. And what I really, really liked here was when we broke above it with stronger than normal buying volume. On a 1-minute chart, if I pull this up here, old balance actually acted as support, as when we broke above it, this 3975 area, it's different than supply, although it did align with supply, and that's when we get more confluence. It acted as support, and it gave enough fuel that if buyers offered support, they were bidding the market, that we would continue up. And if we could get above this, we had nothing stopping us from rallying into our $4,000 target. Then the market pulled back, and same thing. It old upper balance, once above, acted as a support. The market double bottomed there and then rallied. And as soon as we hit 4,000, I got out of this full position. I'm all about finding quality setups when everything aligns. Do I know my setup is going to work out? Do I know it's going to be a good trade? Do I know it's going to be a bad trade? No. Actually, I do know if it's going to be a bad trade, and it's a bad trade if I don't follow my plan, if I don't stick to my rules, if I don't execute well, and I don't implement proper risk management. That's how I know it's a bad trade. And sometimes I'll take bad trades and they work out. Sometimes I'll take bad trades and they don't work out. Sometimes I'll take really good trades and I lose money on them, which you're going to see in the next example. You can trade really poorly one day, right? You could not follow your plan at all. You could deviate away from your strategy, yet you could still come out of the market that day with a profit. That brings me back into the point with, trading doesn't always equate to our profit and loss. Also, you could trade really, really well. You can have really good executions. Your setup hit whatever the case may be, yet you still come out of the market with a loss. Maybe that's because you practice good risk management. And, if you traded poorly, if you traded well, your execution was well, you practice good risk management, yet the trade was a loss, then you have to accept that and consider it a good day because you stuck to your plan and you did everything you needed to do. Just the market wasn't in agreement that time. You're not going to win 100% of the time. Trading is a calculated gamble. It's putting trades on where the risk is in your favor and you have a high reward with very little risk. So you're not going to win 100% of the time. You could trade well and still come out with a loss. So I posted this on my Instagram story. Like I said, I definitely recommend you to follow me on there. And I'm completely transparent about any trade I take, win or loss. This was a losing trade. It wasn't the best analysis, but it wasn't the worst either. I had a plan, I stuck to the plan, and the trade didn't work out. So even though it was a loss, I still think that I traded well. This was on Wednesday's action, July 20th. I was essentially longing the S&P 500. If we could get above this 3968 supply area, we could get above. And the bullish plan from Thursday, July 21st that I just showed you, I was watching it the day prior to that. And I was watching for a strong break above supply, targeting supply. So I got long at this green entry right here. My risk was this point right here at 3965. So essentially I'm risking about 8 points in this case again to make 28 points. So very, very good risk to reward. It just did not work out. The market dumped and we got affected with Google News on Wednesday. We completely dumped, very sudden, and I stopped out of the trade. Am I upset about it? Absolutely not, because I've taken setups just like this. The setup that I just showed you that I won on is very, very, very similar to this setup. And I won on that setup, but lost on this one. So as long as I follow my plan, I execute, and I stick to my rules, it's a good setup, win or loss. If I deviate away from that, then it's a bad trade and I should not be taking it, because I will not continue to be successful in the long run if I deviate away from what I know works for me the best. So you have to define good days by sound trading practices. Like I just said, sound trading practices are going to generate profits over the long run. And if they don't, it's very simple. All you have to do is tweak a couple components to your strategy, and then you're going to be the next step to generating these profits over the long run. And that's why I also stress focusing on the process over the profits. I know a lot of new traders come into the market thinking that it's a get rich quick scheme. They see it all over Instagram, whatever, Twitter, and they think, oh, this guy has a Lamborghini, this guy's flashing a car, a nice house, a watch. I want to be like him. I'm going to follow him. I'm going to stick to his trades, and I'm going to be just like him. It's not the case. In reality, it's a full process. When you focus on the process, the profits will come 100%. And the last point I want to make is that you're setting yourself up for emotional drainage if you go into the market every day expecting to turn over profit. You're going to lose some days, you're going to win some days. Accept it. Do not go into the market every day expecting to make profit. So this is going to lead perfectly right into my second point, which is stop expecting to get rich quick trading. You have to focus and you have to enjoy the process. Think about it this way. There's no developing professional, whether you're an athlete, whatever the case may be, which makes their living from their performances during the early years of expertise building. What I mean by this is that, look at Michael Jordan, LeBron James. Yes, you could say they were great at very young age, but they're not making their living. They're not becoming an NBA star when they're young. Everything that they do in the past, everything they do when they are building their expertise up is going to set them one step further than the competition to make their living in the future based on their performance and their basically, talent in an athlete case. Same thing with, surgeons. Before surgeons actually can make a living and perform an actual surgery on someone, they have to spend years in medical school. They have to do their medical residency for, another 4 years. And then even after that, after they do the residency, they have to spend more years in specialty training before they could even open somebody up and perform an actual surgery. My point with this is that there's no path to expertise in any profession that doesn't first require time to develop more competence, to get better on a daily basis. And in my opinion, with trading, you need at least 1 to 3 years of screen time. Screen time is so important because your brain starts developing different patterns on a subconscious level. and you're going to basically see what the market's doing and reacting. And then you're also going to be able to take losses. And if you learn from them, you pick up your mistakes, that is going to help you a lot. If you're just starting to trade, you can't have high expectations. You always have to be emotionless when trading. You have to act like a robot. This has helped me tremendously. If you have high expectations to start making a living off of trading quickly, it's possible to make a living off trading, but quickly, you learn the whole ins and outs this week, and you think you're going to make a livelihood, next week. You're going to start hitting home runs. You could quit your job. You could drop out of school. You're basically putting too much pressure on your back. You're putting too much pressure on yourself, and you're just setting yourself up for failure and frustration if you cannot prove yourself right. So the main point I'm trying to make with this slide is that it's a journey. Trading is a journey, plain and simple. It's a marathon, not a sprint. Enjoy the ride. There's never going to be a destination. Never ever going to be a destination. And if you think there's going to be a destination where you're going to make it, then you have to always be open to learning more and more. That's how the greats get better. Michael Jordan, LeBron James, famous basketball players, athletes, they never stopped when they made it to the top of competition. They're always looking for ways to get better and better. I'm not saying it's impossible to get rich from trading quickly, because it is, and I know traders that actually have made so much money off the start that it's ridiculous, but you're only going to take out what you put into trading. That's my main point with this. And the last point I want to make before we wrap this video up is working harder at trading means trading less. How many times have you heard work smarter, not harder? Same thing with trading. You're going to work harder by trading less, and basically that's going to make you work smarter. The less you trade, the smarter you are. You're going to understand why. So there's a strong assumption that the more trades you put on, the more you're going to learn, and the faster that you're going to build these expertise, skills. That's completely false. If you trade more often without a true edge, you go into the market without a strategy, without a plan, then you're basically making someone else richer, and you're basically becoming broker. Your account's getting smaller and smaller and smaller. If you cannot go into the market every day confident that your strategy has an edge, confident that you're going to execute according to your plan, focus on risk management, psychology, etc., then you're basically going to become broker, and your account's just going to go down in value, and it's a zero-sum game trading. When someone's buying, there has to be a seller. So for every winner, there's going to be a loser. You have to only focus on high quality trade setups. This is so important, and I stress this out to members of Ameritrade in the Discord room every single day. You have to only focus on high quality trade setups that you have tracked and tested that gives you an edge against your competition. The way to get better as a trader has to do with tracking those patterns and finding your edge present itself on a daily basis in the market and in real time. That is important. Then you have to practice execution. I'm going to enter when this setup hits, when it triggers. You have to practice where you're going to put your stop loss, your take profit. And then you have to also accept those losses when they do occur. And then you're going to get better based off of that. Focus on your setups and your setups only. You have to act like a sniper. And if you do not see your trade setup forming, then do not trade. It's simple as that. If I do not have my setup, I do not trade. If you do that and you trade based off of, thin air, you are gambling. Trading is not really gambling. Trading is finding your setups that have an edge, taking it and managing your risk. The last thing I want to leave you with is just a quote that I read somewhere, which is always expect success and define it to a point where it's going to be challenging yet attainable. If there's no challenge to where you want to be and what you consider success, then what are you basically working for? And if it's not attainable, if it's impossible to reach, and I know a lot of people are going to say nothing's impossible, but you have to be realistic towards your goals, towards what you consider success. If it's attainable and challenging, then you have to work your butt off to reach that point which you have defined success. So I hope this video helped. I hope you liked me adding my commentary or trades to the actual psychology points that I posted in the past. If you did, drop a like. Comment if you have any questions, and also check out the links in the description below. I offer a very in-depth and educational course. It will come with access to the Discord at no extra charge. There's a lot of value and a lot of educational content in this that I'm very confident you will all become a better trader off of. But I'm ending it. Peace out.